Hello. Welcome to my channel, my dear friends. My name is Avilash and I'm a trader next door. In this video, I'll be analyzing the chart of GBP USD, British Pound US Dollar. So if you're watching my videos for the first time, you can subscribe to my channel for regular market analysis. So let's get started. This is the 4-hour chart of GBP USD, British Pound US Dollar, and as you can see, the market is standing at 1.1233. This is the current market price. And as we all know that GBP USD is extremely bearish under the dominance of sellers for last couple of months, and the selling is still continuing. If you have watched my previous videos, then you know the scenario very well, and if you're looking for detailed analysis, then you can also watch the video that I put it yesterday or day before yesterday. So right now we do not have any proper support or strong support on the chart of GBP USD. So it's better to follow the trend of the market, and in this type of scenario, when there is a free fall going on in the market, okay, then sell on rise is the best and the safest trading strategy, because see, no market go up in a straight line like this or fall also in a straight line like this. Market always move in a zigzag pattern. Okay, so whenever market goes down in a zigzag pattern or starts fall in a zigzag pattern, it's always better to take a sell position in these levels. Okay, so if market bounces from this particular level here, see, this is not a support. As I already said, that right now we do not have any proper strong support on GBP USD, but GBP USD may try to bounce from the previous low of 1.1200 to 1.1210. This is the previous low of GBP USD. So if GBP USD somehow takes a temporary support and bounces, and if you want to take some risk, if you have the risk appetite, and most importantly, if you can afford to take risk, in that case you can go for a buy position. If you find GBP USD taking a temporary support and bouncing from this particular level here, keep in mind this is not a support, okay, just a temporary bounce, and you can expect a profit of 25, 30, 40 pips. Okay, so minimum 25 to 30 pips you can expect from this bounce. Not a trend reversal, not a big profit, because right now we do not have any fundamental factor that will completely change the direction of the market. And in case market fails to jump from this level, and if you see the selling continuing in the market, if you see the market is falling again, market is forming big red candles, then you'll get a confirmation that yes, sellers are getting aggressive again, and you can initiate a sell position below 1.1200. So overall the market is bearish, but keep in mind, if you take a sell position below this level, then you must be careful, and please do your proper risk calculation, risk manager, because as I already said, sell on rise is a safest trading strategy, whereas taking a sell position at a breakout will be riskier. Your stop loss will be bigger. And one more thing I would like to add here is, if you go to economic calendar, you will see that today we do not have any USD news. Dollar is resting today, but we have got news on euro, we have got news on GBP, and we have got news on CAD. So these three currencies may show some volatility. Okay, some volatility. It means that the volatility can last for at least 1 or 2 hours. Okay, so it may show some volatility in that particular timing. Please be careful. Okay, so whenever you're watching the video, okay, please look at the economic calendar and just see how much time left for the news to come out. Okay, and during the event, if possible, try to avoid the market. So this is the scenario if market starts falling. Okay, and on the other hand, if market goes up, okay, this is the level where we can expect the market to reverse. Why we're expecting? Because this is the Fibonacci 23.6% retracement level, and considering the overall scenario and being a Friday market, I think that this level has the potential to reverse the market. So the level is 1.1 1.1334, 1.1330. Let's consider 1.1330, and we have 1.1360. You can see I made a box here because this is a resistance zone of the market. This is the Fibonacci 23.6% as well as previous price rejection. So we are considering Fibonacci as well as previous price rejection, and if we combine both the factors here, then we can hope that if market starts going up also from here, if market tries to recover also, in this present market situation, when there is not much volatility in the market, when the sellers are dominating the overall market, then market should reverse. So if market goes up, observe the market. If as per our expectation, if we see that price is struggling around this range, price is unable to cross, market is showing price rejection from above, shooting star kind of a pattern, bearish engulfing pattern, then we get a confirmation that yes, the sellers are present in this level and we can go for a sell position. So sell position here also, sell position here also, okay, if market breaks this level. But this sell position, sell opportunity at the resistance is much more safer in comparison to this. And if market bounces also, you can go for a buy if you have the risk appetite, but please be careful because taking a buy position in this market scenario is always a big risk. Okay, so this is it. Hopefully you have understood. So whatever you do, please follow proper risk management. As always said, do not gamble with your hard-earned money. Protect your hard-earned money and capital. Don't be a gambler. Bye bye, take care.